Hello, hello. I hope you all are having a great day. I was looking to drop off a new video for you all today, Wednesday, December 21st of 2022. We really only have a few days left, 10 days left in the year, and I wanted to give you guys, a continual chart logic. And this is going to be today's chart logic. Today, I'm actually going to use a little bit of gold as well, gold USD. As well as the US30 as to what I usually, have given you guys so far in the last two videos at least, right? And actually let's step right into it with some gold analysis, right? So we have the 4 hour here on this one. And what I wanted to try and do is in today's session, as we can see, it starts right here with this bullish engulfing 30-minute candle. In terms of the New York session for gold, at least, right? And what we do see is that it pushes up fairly decently, right? Like about 5 points, 5 full points from, or actually no, more like 7, 8 full points from that initial, that initial opening candle, and I have this orange line here showing a potential resistance because if I zoom back out, we look at what happened prior. So on the 4 hour, we see back December 13th, earlier, like last week or so, we see a rejection up at that price range, as well as even more recently, yesterday, we see a rejection up at that price range. So looking into today, right, even though you do see this buy, especially after this like consolidation here overnight, it's a good sign, right? A good sign for consolidation is always, but we do see it kind of consolidate as well as then continue try and push up. And within the 30-minute, let's check the 15 and so on, how that looks. Yep. And in the 15, it gets even more accurate, right? With the wick pushing up again, and then the body being down here, as well as then the continual rejection to push it back down. So what's the insight here? The insight is simply that, you can use these previous resistances to know when to move on from a position, when to kind of get out of it, right? And I'm looking and I'm telling you all this today and kind of not even doing it fully myself, because today I ended the day down $217 or so, I believe, exactly. So not a great day for myself, but definitely a learning day as usual, right? Because all the L's are lessons. And what ended up happening in this case was, as it pushed out and up, I essentially, I think the main theme for the day for me personally as the agent as to where I messed up was ignoring some of the opposing signs, right? Ignoring signs that I'm incorrect in this point, and I may need to exit my position, I may need to scale out my position, I may need to move on from this position. And being more fluid in that manner and being able to know when to say, yep, that's it, cut it, or even if it didn't move on and kind of take profits from, that is a big feature, right? I didn't end up trading gold early in this session. I didn't trade it up here at the first 2 hours of the New York session or so. I traded it a little bit later. I was looking for the short actually from this top portion of the 21s, and that was probably my one win of the day. So I took a total of about 3 positions all in all, which was this gold one that I'm mentioning here that was profitable actually. Catching that short, I believe, from the 1819s just below this candle, as we saw this candle as a bullish engulfing on the 5 minute. Bearish engulfing on the 5 minute. And then I saw it starting to form on the 15. So I was looking to try and catch that short to push it back down to, come on. There we go. Push it back down to here as, here even, as the range to continue to take profit. It ended up occurring, but then we started to see this pin right here on the 15, as you could see, when it came around 11:15, and started buying pressure started to catch back up. So I ended up closing that position before it reached take profit, because it didn't necessarily reach it until way later on in the afternoon. But that was still a profitable position, and I realized what was happening, and I was able to be more fluid, more dynamic in understanding. And that was probably the main focus on gold, as being able to understand and use previous resistances, previous levels, previous rejections to then determine where it potentially could go next, right? And I'm not saying it will go there. Like, hey, it hit this, it's going to get rejected. No. I'm saying that the probability of it occurring is greatly increased because it has happened before, right? Allowing you to gain an edge of some sort in the market, or in whatever index or commodity you're trading, because you have used these insights and these past information going forward. So if now we take that kind of thought process and we apply it now to the US30, the good old Dow Jones, and we look at today. So if we start at today's candles, the first candle was in the 15-minute a bearish engulfing candle, showing some rejection. But all in all, if we look even closer at some of the candles at 5-minute, the first real period of time, it was a lot of up down. 5-minute up, fully down. Right? You see most of these candles are engulfing each other, and that's showing that, hey, there's potentially a base here. There's potentially a bottom at this current short in time period that can then be used to make its move on up, right? To make its next leg up, which is what occurred after the fact, right? And in this scenario, I actually exited this position early at a slight loss because of where my entry points were. I was nowhere near as precise as I would like to be, but I was able to identify this base here at the 33100, and I did call that out and place that on my Twitter for individuals that do follow me there. If you don't, please go ahead and give me a follow. I'll put that tweet somewhere here maybe, so you all can see the time period and so on, and what I was mentioning, and some of the insights I provide on that end on Twitter on a real-time basis. But we did end up pushing up after exiting those buys at a slight loss, but we're taking it as a lesson. We're moving forward from it. I'm never gonna kind of be super stuck on that. You got to be able to know when to take your piece of the pie and when to just let it run and miss it, and it's okay to miss the trade sometimes. After that, we did push up into this rejection zone right here. And if I go to the hourly now, I could see where that rejection zone was, right? So as you can see, there's not much data up here over the past few days. So I had to go back even further in the time brackets to see where I can get some insight as to where this may stop. Like, where does this truly end, right? And this was an area range here, what made me draw this red line, as well as these periods here, right? Where we see multiple push down, where they act as support in the moment, and being that we're currently below that price level, that I'm kind of taking that as a grain of insight results, and saying, well, it may act now as a level of resistance. And then on top, but the conflicting theory that I did have at that moment was, hey, we had to be based off at 33,100 earlier this morning. And then after we saw a big run up, we saw 200 points, a nice 0.5% move or so. But then following that, we saw this bull flag form, this formation of candles where it pushed up to a rejection and it tries to consolidate and then breaks out, right? So now I'm in this position trying to catch this breakout, wondering if there's going to be a continuation, right? Wondering if there's going to be that continuation that pushes up, and maybe ends into a whole different bracket zone or a different price level, where I was then kind of aiming for this range up here, slightly above. So to go from about 390 to 400 to the 520 would be a solid move, another 120 points, not much less than what we moved earlier in the morning, showing that it's a possibility of it occurring, right? It's not outlandish. I'm not saying that within the next, 3-4 hours of trading, we're going to see a huge run up, another 600 points, or those types of movements and price action is reserved for the more volatile days, the days where there's more news, the days where there's more insight being presented based on the markets, right? Maybe industrial numbers came out in this case, where the Dow Jones is affected by that because of the 30 names that are within it, the very important industrial names, where we see the Dow index, right? We see names like Caterpillar, names like Visa, Honeywell, Johnson & Johnson, insurance companies, IBMs, like the true heart of what America's built on in terms of infrastructure. So that's why things like the manufacturing figures and those data points coming out are big for the Dow, because it moves that index. Those are the names that are going to be affected within that. And if you want to get some more information on that, I would gladly make a video on what is comprised of these indexes. Actually, yeah, I'll go ahead and make that video for you all. What really moves these markets in terms of indexes, at least, like the individual side and kind of insight on that. But that's enough for now. I'm going to get back more into the logic of it, the chart logic, as I mentioned. And in this case, it played out well. The bull flag played out well, right? Where we broke out, we had a very good bullish engulfing. 5 minutes showed that. Not so much on the 15, but then we saw rejection. So earlier in the video, when I mentioned that, kind of ignoring news or ignoring new information because you're kind of maybe more stuck within your bias, this is where it got me today, right? Where I was, looking, I was handsomely up in this position at this point, and I kind of started to ignore the fact that this is a doji here, and doji candles are meant to show a potential indecision in the market, or a potential change of direction, an inflection point, if you will. And I ignored that on the 15 as it continued to show that, hey, some selling pressure was going to come in and push through and push price back down. Ended up closing out that position at a loss as well. But this is all a part of the learning, and that's also why I'm even making these videos, so that I can use these videos as a form of review for myself. Even it's not only to be able to push out content and be able to inform individuals on stuff that took me years to try and figure out now at this point, but also as a personal review of myself and how inflection of how well I'm doing as a trader, seeing where I'm messing up and trying to get better at that, right? So with that being said, in terms of insights going into tomorrow and kind of looking at things, I'd say the good news is that we bid back up even after this fade, right? So we have this kind of cup forming where we have a double bottom as it's trying to break out of maybe this zone. And we know that this price level, this 33,400 price level on the Dow, is one that's very important. Where can it go next? We don't know exactly, but we can use previous data to try and figure that out. If we start to see more weakness in the futures and overnight, because we are, past market close at this point at 443, but if we could potentially see that same push back down that we saw today happen twice. So there's a potential possibility of catching 25, 30 basis points here, 80, 85 points, as we would potentially move back down. Or maybe we hold up here throughout the night, and then tomorrow morning, but tomorrow morning, we may, start to see that potential move that I was looking for today. Maybe we do see a move from the 33,400 up into the 33,520s that I mentioned that are somewhere up here, right? Kind of looking at this, boom, right? In this price range. And why is that? That's because, over here we see where it, oops, I went back a little bit too far, where, move this out the way, where, it acted as resistance and then eventually broke, held it for some hours, and then continued on, as well as, a potential support here that ends up bidding back up. And then even before, where we see a Harami candle, I believe it's called, but just like more like a pin. And this is what I mentioned in yesterday's video, right? Helping stop the bleeding out of the canoe, helping stop from sinking potentially, which is what it did here as it continually bounced on this lower level that I'm mentioning today as a support, and even in other smaller time frames here as a level of support. So I think this 33.5, 510, 33.520 could potentially be the next leg up. Whereas on the other side, if we see weakness, look at price action, see how the other indexes are in relation or in correlation to the Dow, or maybe not in correlation, maybe they're inverse of each other in terms of price action for the day, and see how that could be further used to get some more insight and push into tomorrow. So that is about it for today's chart logic. Today's a much longer video than usual. Give me some feedback as to how you may think, how are you thinking about the chart logic videos? Are you appreciating them? What are you gaining from it? And also, please feel free to give some feedback in the comments so that I could get better at this, because I really am enjoying this process so far, 3 days in, and I would like to continue to do that. I think it's helping me get better, helping me maintain, and I just would love to be able to give out content, especially in the way where 3 or 4 years ago I would love to have had this come through my YouTube suggestions, just trying to understand what this candle means, what does that mean, and so on. So like I mentioned, feel free to give some feedback, and also please subscribe, like the video, and turn on the notifications so that when I do drop a new chart logic for you all, you are ready to enjoy it. All right. But that's all for the day, and this is the Agent 14 signing out. Peace.